Hello, Southwest Florida homeowners and homebuyers. Welcome to the 239 Real Estate Roundtable podcast, your go-to source for navigating the vibrant real estate landscape of our beautiful region. I'm your host, Kevin Tremmel, a local real estate agent, leader, and investor here in Southwest Florida. On this podcast, we bring you insights from best in the business, top-notch real estate professionals, seasoned agents, and experts in everything from homeowners insurance to mortgages, maintenance, and repairs. Whether you're a first-time homebuyer or a seasoned homeowner, we've got you covered with tips, strategies, and valuable insights to make your journey in Southwest Florida's real estate market a breeze. Get ready to unlock the doors to successful home ownership. This is the 239 Real Estate Roundtable podcast, where we demystify the process, share insider knowledge, and ensure you're well equipped to make informed decisions. Let's dive in.
Hello, everybody. Welcome to another episode of the 239 Real Estate Roundtable podcast. Today we have Brendan Davis with us with Magnolia Vacation Rentals. Brendan started his business in 2022 and scaled his business from having no properties under management to today having 73 properties under management in only 2 to 3 years. So now he's looking to expand into other states. So looking forward to our conversation about short-term vacation rentals all across the United States. Welcome to the show, Brendan.
Thanks. Glad to be here.
Awesome, man. Why don't we get started so the audience can kind of get to know you a little bit? Who's Brendan? What motivated you to start your own business in 2022? And how's the road been since you started?
Yep. So back in 2022, I was active in law enforcement full time, kind of suffering just from the burnout, I think, of the career. I'd spent a little over 10 years in it, done various different jobs in it, kind of finished my career out in the training division. So I got introduced to real estate actually when I bought my first house. Kind of got to work with the real estate agent. I ended up talking to her afterwards, and she was telling me a little bit about getting in. It seemed like it was treating her very well, and I decided, well, maybe this would be a good way to supplement the income that I currently have. So I got my real estate license, went to a boutique brokerage in my hometown, and I had a really interesting experience there. So it kind of shifted my views of real estate. I think I originally had the traditional real estate agent view where we're helping people buy and sell houses, but at the brokerage, there were a lot of people who owned other businesses. They were real estate investors or property management. So it really showed me, like, when you get into real estate, there's so many different avenues you can go, and you're not just limited to helping sellers and buyers. So one of the things that I discovered was real estate investing. So we ended up getting into our first, what we planned on being a long-term rental, got it under rehab. By the time we were done rehabbing it, kind of did another analysis. We were like, okay, this would make more sense to go ahead and offload it due to the market at the time, which was super hot here. Stuff was selling almost as soon as you put it on the market. We were like, okay, let's offload this. Crazy amount of equity in it. We'll take the money and then we're going to reinvest that into a short-term rental at the time. The market was in the Smokies that I was primarily attracted to at the time. I'd always been going there ever since I was a kid. It was something I wanted to do, and I was seeing all the hype online about buying a short-term rental, how it was the thing to do. People were talking about you can buy these things and eventually cash flow so much so you don't have to work anymore. So I had my sights on that. In the process of that, the first thing I decided I need to do is like, well, if I'm going to buy one of these, I need to figure out how to operate it, all the day-to-day tasks in it, because it is a very complex thing to do. It's not like, you put a tenant in there and check on them every now and then. There's a lot of turnovers. Things have to be maintained and cleaned to a different level. So I spent several months trying to figure out everything I could do, one, about the short-term rental market, figuring out how to, run numbers on deals, then how to operate it. When the time came that we were starting to make offers on properties, I went to my broker because they had a rule at the time that you couldn't manage your own properties there for liability purposes or whatever the reason was. But they had a property management division, and you can put your property in there for like 2%. It was something really affordable. But I presented them with this. I was like, hey, I'm trying to buy this short-term rental over here. Like, what are we going to do about management? Like, do I just put this in y'all's management portfolio? And they're like, we have no idea how to do that. That is unlike anything else we've ever done.
Because it was mostly long-term, like in that portfolio?
Yeah, they had a lot of doors. I think there were like 700 units on the long-term. But short-term was totally, totally outside their wheelhouse. So I was like, well, I know how to do it. Like I've done, at least I thought I did. It's like I've done all this research. I kind of figured everything out. Figured out all the software I need, everything. So they asked me if like, well, why don't you partner with us and we can open up, our own short-term rental division here. But it ended up not being a good partnership. Had some differences in visions and ideas. So we ended up splitting ways and starting on our own.
Okay. Awesome. And then that's where Magnolia was born, I guess.
Correct.
Right?
Yep. We kind of figured out what all I needed to do. There's a lot of people try to do co-hosting and stuff like that to try to get through all these loopholes. If you're actually going to open up a short-term rental or vacation rental property management, each state has different regulations, stuff that you have to abide by to do it correctly. So we went through the whole process to make sure everything was legal, valid, licensing, and everything. So I figured out everything I needed to do, which was actually really difficult. It's not hard. It's not easy to find all that information, believe it or not. I mean, you call the different states, a lot of them have no idea what you're talking about.
Yeah.
But we got all that set up, got licensed, and got to work.
Awesome, man. Now, 2022, starting the business, here 2 to 3 years later, we're at 70 properties under management and growing, looking to expand into other states. Like, where do you think that success has come from? I know we talked about that a little bit earlier off camera, but what do you think is like the secret sauce? Like how you've grown so much? Like, how did you acquire all those properties?
One of our biggest things has been revenue, and it's not necessarily into one market. I think almost any market you look into kind of starts to have this issue. During COVID, people weren't able to get on planes and stuff like that and go on these cruises. So you were seeing a lot of traffic to these drivable vacation rental markets. Mm-hmm. So numbers just spiked up, and then numbers started coming down. And a lot of things happened during that period. Obviously, people started buying things that were with like ridiculous mortgages and overinflated rates, just in justifying those crazy high spikes in order to pay for them. But before that, I think a lot of people in these certain markets just kind of it got really competitive. So everybody started buying in these markets, and certain markets just kind of got overloaded with competition now. So some of these markets that maybe had a much smaller amount of vacation rentals all of a sudden like doubled in size. And a lot of property management companies or even, individual operators were used to doing things a certain way for a very long period of time. And when the market changed, it started getting more competitive. Nobody really adapted. So one of the things we've done is be really adaptable to the market because it's shifted so much in the past few years. 2022 was actually, we were still kind of taking advantage of those COVID numbers. We got into 2023. It was a little bit different. It was still good. 2024 was a huge change in the market. We saw, lows in different time periods when we normally wouldn't expect to see lows. So in order to stay competitive, there's a lot you have to do during those like highs and lows. And a lot of people just, I think, aren't willing to go in there and be as active when it comes to management to make sure that you're staying competitive.
What are like some things like when you say, things, you got to do a lot of things to stay competitive, like how does that look in like an application, real world application? Like what are some of the things like you would do to like stay competitive?
One of the things that I do is each property, I have a custom made comp set based off proximity and property type. So I'll generally build one out when I have really high performing properties. So if I'm doing a 2-bed, 2-bath, for example, I try to do it all locational because location is a huge factor when it comes to how a property is going to perform. So I try to use properties that are only within a certain proximity of my property that I'm managing, and I'll build out a custom comp set. So I try to I'm like, okay, what are my 2-bed, 2-baths that are producing really high revenue? What are my mid performers and what are my low performers? And I have a group of each. And then I'll kind of figure out, okay, this property that I manage, where does that actually fall? So I'll look at like, what is these high performing properties? Like, what do they have? Do they have incredible views? If we're talking beach properties, are they beachfront? If it's in the mountains, does it have a great mountain view? What type of amenities does it have? Does it have an awesome arcade room, a sauna, a hot tub? So I'll look at that on the high performers and I'll compare that to the property we're managing. I'm like, so where do we fall in here? Are we in the middle? Because a lot of the mistake I see is a lot of people want to be at that top revenue spot, but their property isn't there. So they're trying to ask these, really high nightly rates, but they're not going to get them. So their property sits empty, or it maybe books occasionally and they're losing several $1,000s a month. So I try to plug in the property where it actually fits, where it makes sense. And then we're constantly monitoring our competition's prices. Like, what does their occupancy look like? What is their ADR? For the best we can tell, I've got certain softwares that can pull their nightly rates, and it's relatively accurate. It makes some mistakes every now and then, but it gives me a pretty good picture of where they're at, especially when it comes to occupancy. So I'm always monitoring those, and we're making adjustments based off our competitors.
Awesome. Yeah, that's interesting. So sounds like pretty data driven, data heavy, and then what you're describing to me sounds like very similar to like if I would do like a CMA for a seller, right? But just
Correct.
obviously modified to a like a short-term rental situation, but look at comps and then adjusting your property to and how it compares to the comps and take down dollars if, you know, obviously it's lacking, or add dollars if it's better than a comp and things like that, right? That's what you're getting at.
Absolutely.
Yeah, that's awesome. And then I'm glad to hear that, you know, you alluded to it. It's not just in general real estate sales where obviously most sellers or owners think that they have the most awesome house on the block or in the neighborhood, right? So it sounds like you're going through that a little bit as well. And then
I run into it all the time as a property manager. And actually, you know, I tell everybody the people who do that end up having the worst performing properties.
Yeah. Same with in general, right? I always tell sellers that I work with or prospective sellers, if you price your property above fair market value, you'll end up selling it for less and it'll take longer than if we just price it at fair market value, right?
And what happens when you're on these OTAs like Airbnb and VRBO, when you price your property so ridiculously high, it stops getting clicks, it stops getting action. The property just kind of gets lost. Like, it's not going to be found. All those booking platforms are going to look at it and be like, okay, this property doesn't get any action. Nobody books it. So we're not going to show it off. It's going to be in the very back page and it'll probably never get seen by anybody eventually. And that's why it is so important to be competitive with your pricing. And even during low season, sometimes your property may be, another thing you run into is your property may book really well during peak season. Then you get into low season and people are like, well, I still don't want to cut my rates. I'd rather it sit empty. Mm-hmm. I can understand it to an extent. However, you're going to pay for that when it comes to because that property is going to die off and it's going to take it a long time to start getting back to where it's visible again, even during busy season.
Yeah, that was going to be like my like a follow-up question I had, and I'm glad you brought it up. So, you know, you do, as of right now, a lot of business in the Smokies. You know, I'm in Southwest Florida, which is also very seasonal, as I imagine the Smokies to be as well. What are kind of like some strategies you would recommend for kind of maximizing occupancy and attracting guests all year round, not just 3-4 months out of the year? Like, is there, besides cutting prices, do you have like a special come back and see us in off season and get like a nice rate, you know, stuff like that?
So I think in a lot of these during off seasons, and like obviously the beach is different, it's cold. So during January, February, you probably don't want to be laying out on the beach or getting in the water, but there's still a lot of things there. And in any of these markets during off season, you can still do, and you can beat the crowds. So we try to push out to people and do some marketing. Like, now's actually a great time to be here. You know, like you can go into a restaurant and a lot of times don't have to make reservations. Everything's still open and you can enjoy a lot of these things without all the traffic, the heavy crowds, and you are going to pay lower rates than you are if you're going to book during peak season.
Right.
Yeah. And the objective is, you know, for me, because I'm a big data guy and I try to learn the algorithms as much as possible, I want occupancy up during slow season, not as a revenue thing, but it's very important to keep the ball rolling. You need to still be getting clicks, you need to still be getting bookings and attention, even if they're at rates that you find undesirable. That's going to help you out to get that action during slow season when it comes time for all your big bookings to start coming in.
Interesting. Yeah. I guess, you know, $50, $60 a night is better than $0 a night, right? It
is. A lot of people have the mindset when their rates get super low that, you know, like they're going to start getting undesirable guests and stuff like that. And that's not the case. It's just kind of a myth. Like, we've had like bad guests that paid astronomical amounts during peak season. So the rate doesn't really control the type of guests that you get. You know, I use the analogy for somebody recently, and it's kind of, I don't know, he said he had a hard time understanding it, but I recently sold an old beat up work truck that I have, and I priced it according to what it was. And when we were having a conversation, he was like, well, I want to raise my prices up so wealthier like guest will pay for it. I'm like, well, it's like if I would have sold my truck and asked an astronomical amount and be like, I want a wealthy person to buy this beat up truck.
Yeah.
If I raise the price up, that doesn't mean they're going to buy it, right? They're going to go buy something that's worth that amount of money. Like, if you try to raise that price up super high to only attract a certain amount of guests, if you don't have the amenities or you're not offering that quality product that's that high, then you're just going to get nobody.
Yeah, it goes back to the comps, right? Like, I mean,
right.
You can raise your price, but then you're competing. Look, like you're competing with this property has this, which yours doesn't. This property is located here, yours is here, right? Like, it's just the same thing. Yeah.
I always say like your minimum nightly rate should be like the minimum you need to be able to make money during those months, right? Like you probably like, you know what I mean? If you rent it out for $50 a night several times, you can't make your mortgage anyway. Like, maybe not. Set it something reasonable. Obviously, use your competitors as a good benchmark for that, and set it low enough where you're going to get attraction, but not low enough to where like you're giving it away. Also, but you do want to make sure it's at that point where someone would reasonably book it.
Right. And then let's say someone listening or wants to buy their first short-term rental property, right? Earlier you kind of mentioned location's huge, but what are like some other factors people should look at when they look at their first short-term rental property for it to be like successful and consistently profitable, not just for a year in the high season?
Yeah, uniqueness. One of the things I see in a lot of big major markets, I'll use the Smokies, for example, in Nashville. Nashville is another good example. And I see the same thing in a lot of the beach condos is you kind of get exhausted after looking for a place to stay, right? Because everything really looks the same. If you're searching for a 3-bedroom cabin in the Smokies, you're going to see just a crazy amount of tongue and groove,
right,
bare decor, stuff like that. Nothing really stands out and catches your eye. So try to find something that has some type of uniqueness to it, and or has the potential to be unique.
Mm-hmm.
Like when obviously, like we mentioned before, the number one thing I'm searching for is proximity. I want to be in good proximity to the local attractions or whatever the driver is of that market. Each market is going to have its unique specific things that are going to be driving people to travel there. So I want to be in close proximity of that. And then I want to be able to find like, views or something like that. Like when I'm looking at a property, if it's in the mountains and it has an incredible mountain view, all right, what can I do with that view? Can I strategically place a hot tub on here to where it has a panoramic view of the mountains? Or if I have a beach house, is there a pool with amazing view of the ocean?
Right.
Just looking at, yards are really big. A lot of vacation rentals don't have yards. Certain markets it's really hard to come by, but if you can find one that has a yard, that opens up a huge door of possibilities that you can do and things that you can add to make that property more unique than your competition. And that's how you're really going to survive a lot of these falls and ups and downs.
Cool. Yeah. So location, like close to proximity or close in proximity to whatever drives that tourism, and then just uniqueness, whatever it may be. Or if it's not unique now, some kind of vision that you can make it unique, like probably relatively inexpensive. Obviously we're not talking about buy this property and tear it down and build a new one, but like something with like fairly inexpensive touches, you could like make this unique and stand out in a sea of tongue and groove bear hunting cabinets, so to speak.
Right.
Yeah. Awesome. And for you, I know you started, and I'm not sure if you still do it, but you have your real estate license and started off in general real estate. I'm sure, you still have people kind of talking to you about, hey, I want to buy my first investment property. Like, what should I buy? Would you recommend to anybody to buy a short-term rental property as their first investment property? Or would you kind of recommend, hey, buy like something long-term first or do like a flip first? Or do you say, hey, short-term is fine as long as you have someone like yourself to kind of advise them and manage it for them? What are your thoughts on that?
I think short-term is absolutely fine, but you really need to know what you're getting into, do your research, and you need to buy properly. That is the biggest thing. The biggest mistake I see right now is people just haven't bought correctly. They've really over-leveraged themselves. So I think as long as you buy correctly and you've done your research, you kind of know what the expenses are, and you know that it's something that you're going to have to continuously put money into every year. Because the market conditions, like I have no idea what 2025 is going to bring right now. It actually seems to be looking like a better year than 2024. The booking lead time has actually changed. I'm seeing further out bookings than I saw last year. Summers and peak seasons are actually starting to hit now, whereas last year it was like more of a kind of a last minute booking window in most markets. So, but things can be subject to change. The competition could get even higher and heavier, and if you're going to really survive and do well, you have to be prepared to look at, okay, the competition is getting heavier. Here's what some other people are doing. Okay, now I'm going to have to spend some more money to set my place apart. So as long as you understand those things, I think short-term rental could be a fine first investment.
Okay, that's interesting because I know a couple people that are actually looking to buy like a cabin like in the Smokies to use themselves, but then rent out when they're not there, kind of thing. And I think what people are most afraid of is just like finding someone that's going to manage it properly for them and just the distance to it and things like that. So I was curious to hear if you would recommend it as like a first investment, but sounds like, no problem. If you take in consideration the things you obviously mentioned. And then there's obviously like a lot of buzz, like in the news, you read it every once in a while, kind of certain counties or cities or states are kind of cracking down on the short-term rental industry. I know other states are more lenient than others, but what have you seen when it comes to that? Like how have kind of like regulations and things like that impacted the short-term rental industry, and like where do you see it going, let's say in the next like 3 to 5 years?
I think there's certain markets that are pretty much always going to be safe, like the Smokies, places like Orlando, certain markets that are really solely tourism based, right? Like a market like Nashville has actually taken some pretty significant regulation hits on it. But there's so many other industries and so many other things in Nashville other than tourism. If tourism were to disappear from Nashville, Nashville would still be functioning, still be surviving. There's so much industries, but you take a place like the Smokies or some of these other really big vacation rental markets, and if tourism were to disappear, they really don't have anything left. There's not really a lot of industry. Most people that live in these locations, their job is in tourism in some form or fashion. So I find that those markets, like, they're usually going to be relatively safe. You do see regulations and stuff come up, but it's not like it's safety regulations. They want to make sure your properties are well maintained, because you do get a lot of people who don't maintain their properties at all. They're trying to maximize their return on investment, and they don't put anything back into it. So there are going to see regulations where people are trying to crack down on that, and it's just to make sure guests are safe. When you get into a lot of the bigger like cities and metro markets, I find that a lot of times, like, it seems like you'll get hotel lobbyists and stuff like that are angry neighbors and stuff, that they want to get rid of these things, and the cities will kind of start cracking down on what they'll issue permits and stuff like that. One of the things that Nashville is going through, there's a lot of areas that are zoned non-owner occupied STR, some are zoned owner occupied STR, and some of them, you can't at all. And there's some places that have properties that are grandfathered in, but if you were to, that deed were to transfer, the new owner is not going to be able to use it as a short-term rental anymore.
Interesting.
So yeah, I think Chattanooga is another market like that. So I tend to, for me, Nashville, I do see some opportunity there, but it's not a market that I'm personally going to invest in for those reasons. So I tend to try to avoid markets like that.
Awesome. Cool. Yeah, great answer. Great insight. Well, thanks, man. I appreciate your time here today. And if someone wants to learn more, or if someone wants to look for their next vacation spot in the Smokies and soon to be the Panhandle of Florida, where's a good place to start? We'll obviously link all your websites and everything down below, but where's a good place for them to start if you want to tell them?
Yeah, I can be found on Facebook. You can message me there. And then our website is a great place to look at different options, all our company contact information there. So you can call our number. If you tell them you want to speak to me, I'll be able to give you a call back.
Okay, awesome. Well, thank you so much, Brendan, for your time. I hope everybody learned as much as I did about short-term vacation rentals. And thanks, man. Appreciate it.
Absolutely.
And that wraps up another insightful episode of the 239 Real Estate Roundtable podcast. I hope you enjoyed our discussions and gained valuable knowledge to enhance your home ownership journey here in Southwest Florida. A big thank you to our incredible guests, and of course to you, our listeners, for joining us. If you have any questions or topics you'd like us to cover, or if you'd like to connect, feel free to reach out. You can find us on Instagram at @KevinTremmel_real estate, on Facebook at Kevin Tremmel Real Estate, or visit our website, kevintremmel.com. Don't forget to subscribe so you never miss an episode. Your feedback is crucial, and we're always eager to hear from you. Until next time, this is Kevin Tremmel, your host, signing off. See you on the next episode.